Hey traders, Akil here, and want to give you a quick video after yesterday's big decision. If you've been following the markets for the last few weeks, or especially this week, the markets have been really just kind of asleep, not moving in too big of a range in anticipation of the FOMC statement yesterday. Now that we got that out the way, we're seeing these big impulsive candles, and well, it's good for us because it's going to set up our next trading opportunities. So in the next few weeks, I expect some pretty good structure-based trades as well as some advanced patterns coming into the market. And there are actually a few right now. Before we get into the few right now, we're going to start with one we took last week, or it might have been 2 weeks ago. It's pound Swiss. We took a bat pattern on here, or a Gartley pattern, X to A to B, B to C, C to D up here, and you can see we've basically we got entered, and like I said, for the last 2 weeks we've just been, let me change this crosshairs, make it easier for you guys. For the last 2 weeks we've just been going sideways. We dipped down into the profit and we came back up to break even, double topped, then we consolidated, then we spiked against us a little bit, putting us into the red, and now we've broken down into our profit level once again. Now we're up 100 pips or so, and a lot of traders are, oh man, triple digits, I've never seen 100 before. I got to get out the market right now. Price action dash structure. How do I know this isn't going to reverse? What should I do? I'm just going to take my money. And that's a mistake that many traders make. One of the biggest mistakes I see when working with clients and just talking to traders around the world is early profit taking is the death of them. How do I know? Well, because I used to make the mistake as well. So I do want to say this. Even though we're up 100 pips, which seems big, this is not our money yet. We are not in profit until we hit our targets, until we're able to cash out. This just means you're up. So you can't start counting your money before you pocket it. With that being said, currently we're at a risk reward profile like this to target 1. We actually had a pretty good one on this trade. Now, based on some basic structure analysis, if we break the structure level right here, this is going to allow me, if we break and close below the structure level, this is going to allow me to roll my stops down a little bit more, because it signifies that we're in a rotation of trend. So I'm going to pay crucial attention to this level. And again, if we break and close below here, we still have this structure level to deal with. But I'm going to be able to roll my stops, say, from up here at 49.19 to down right above these highs to protect myself a little bit. And you can see that just increases my risk to reward ratio and doesn't give me so much exposure in the market. Now again, that's up to you. Follow your plan. If you don't have a rule about rolling your stops in your plan, don't implement it on this trade. Sit back, write a rule, do some testing on it first. But this is something I like to do. I like to trail my stops based on structure, even if target 1 isn't hit yet. Sometimes we'll see the market reverse and stop me out, and I'll have to eat crow. Other times the market will reverse, and I'll take a lot less loss than what I would have taken. Sometimes the market goes down and hits target 1. The key is, the main thing in my trading philosophy is conserving my losses, and this allows me to do so. So let's roll around some of the things I had on my radar. Dollar yen, we had a cipher lined up on here, and we actually have another one. It's going to be a smaller cipher pattern if we zoom in, and we're looking at what's going to be an X to A, an A to B, a B to C, and a CD completion right up here. And let me draw my 786 in from my X leg to my A leg. You'll see, yep, our 786 is going to come in right at 91.51. So potential cipher pattern right here at 91.51 on dollar yen. We had one drawn up a little earlier in the week right here, but obviously we've broken down, so we have to readjust our analysis. CAD yen actually has a cipher pattern at market, I believe. Yep. So I'll try to get this video out to you quick. CAD yen has a cipher pattern at market. You can see it right here. We have our initial anchor leg, X to A, coming up for A to B. If I bring in my Fibonacci extension, swing high to swing low and back up, you'll see that we just nip the 127 extension, and we're looking for a potential cipher, or we had a potential cipher complete already at 96.84. Now you can also look at this as a bat pattern as well. If we take this full move as our X to A to B, or a Gartley pattern actually would be B to C, and C to D. Either way, they're both completing in the same level. They both already completed actually, so you need to get involved in this if you have those two trades in your rules, and you're probably getting involved at a much better level. Let's see where that 127 comes in at. The 127 comes right in that 97 flat. So if this is still around that area, 97 flat, then you're at your Gartley pattern completion. As long as we're above that 96.84, then you're still getting a better entry for your cipher pattern. So I'll try to end this video quick. Let's look at one more thing. Dollar CAD. Dollar CAD, we have a big boy pattern on here. Probably, let's go out to the daily chart on Dollar CAD, make it a little easier to see. And we actually have a deep Gartley here on Dollar Canada. We're looking at our impulse leg right here, X to A. You can see we come close to the 786, but we don't quite hit it. In my rules, as I don't have a almost hit or a zone, either it hits it or it doesn't. If it doesn't hit it, I'm looking Gartley. So we have an X to A to B, B to C up here, and I'm looking for a 127 for my Gartley pattern completion. Now, because we come so deep with our B leg, I know this 127 is going to be pretty deep. Why does this not bother me? Well, because this just allows me to have an even better risk reward. If I'm looking at my potential stops being around my 113 Fibonacci inversion, which is going to be right here, I'm looking at a risk on this trade of about this much. If I'm drawing in my Fibonacci retracement from A to C, or A to my potential D, I should say, I'm looking at target 1 right around here. And well, you don't have to be a math genius to see that your potential reward is about 2 times the amount you're risking on this trade. So although it's a deep Gartley pattern, it's a great trading opportunity. So that's it. Let me shoot this out to you because some of these trades will be at market, and I'll see you this weekend as always with the Live Room weekend review. Don't forget, if you haven't seen the video, make sure you sign up for that technical trader workshop. Reserve your seat now. You don't want to be on the outside looking in, trust me. So if you haven't seen it, check out that video. Go to the Trading Power home site. It should be right on the home page, and make sure you sign up for the technical trader workshop coming in September 30th.